Hello, this is the Chart Profit video, approaching 90 minutes into the trading day, 31st of August. This is the graphic from the pre-open today showing the S&P E-mini. This level here at 28.5850 is the minor controlling price support. As we know, last week the E-mini found support there, just a minor test of that level, and then rallied. That was the first available support that showed strength. And although I haven't actually marked significant buying recently, the market has not shown any sign of weakness, certainly not here in the profile yet. Last time I marked significant selling was back over here 24 days ago in July, just represented a normal dip in the market. We saw the buyers re-enter on these green bars here, and then we've seen obviously the breakout to new highs. Currently holding that breakout, the breadth. The New York Daily Breadth indicator is green, which is positive, and the price oscillator at the bottom here is above zero and green. Let's look for something to worry about, and I'll give you two negative thoughts. One is here on the price oscillator. If we see the indicator turn down at this point, you'd have a negative divergence across about 30 trading days, which is within the limits I usually look for on this. You can see price has gone out to a new high, and momentum at the moment is not confirming. That would need to turn down to confirm. Last time we saw this was across this period here back in May, June. And we should also look at the sentiment as described in the pre-open today. I said that my version of the RIDEX assets ratio jumped to 26.9, jumped up from 23.57. That's quite a jump. There are only three ratios higher than this in the database, and these were late January, early February, the highest being 27.55. So this is where the ratio is currently, and as I've said, we've only seen it higher than that previously in the database back here early in the year, very close to the high. So there's definitely an emergence of bulls here and optimism. Actual total assets, bulls plus bears, nowhere near as high as it was at this point. Just from a contrarian point of view, this is worth noting. I find the RIDEX indicator just about the best when looking for overly bullish situations and possible tops in the market. The other indicators that we're looking at here, the public poll from AAII, at the highs, yeah, they're probably getting overly optimistic at this point, but generally, as per most other sentiment indicators, much better at finding the bottoms in the market when sentiment becomes measurably extremely bearish. So I'm not seeing the current reading here particularly worrying, nor really in the investors' intelligence polls. Certainly at this point there was an extreme up at the high. Looking at that black line, the 4-week moving average of bulls minus bears. We've seen bulls percent higher this week at 57.3, the highest since February, but the bears 18.4. They've actually changed very little for the last 8 weeks. And the Lipper US fund flows, they reported equity fund including ETF inflows of $2 billion in the week to the 29th of August. I follow the net week flow, that's that black line, and that's currently at 3.48 billion, which again is pretty neutral. Last big reading, as we know, on this chart from this indicator was at this point here, which was just about here, when it indicated a massive outflow over 4 weeks on this little dip in the market here, just 2 or 3 weeks. Clearly the market's been up since then. There's been net inflows across that period, but it just brings us back to the zero line more or less. Nevertheless, the RIDEX ratio has suddenly jumped higher, and that is close to the all-time high for that indicator, and that's definitely worth noting. I mentioned on Wednesday in the pre-open that longer term distribution suggests that price above 2900 may be extended. I've gone on to say that if that is the case, then a fast rejection will take place. That would mean a quick retracement in price from above 2900. That would take us back below this minor support at 25.8550, and on the longer time frame that I'm analysing, price below that level would be the first minor sign of weakness in the longer term. Thus far there's been no sign of this rejection. We'd also be looking for red or effective selling to appear on the profile. Haven't seen that either, as I mentioned earlier. We'll look first of all at the spider. Found support at the 35-day at 285.70, and we're up from there. This week has kind of gapped up. Clearly at the moment we're holding above the breakout above this previous high earlier in the year. IWM, the Russell 2000 ETF, again out at new highs here. The first support from my point of view is down here, the 8-month at 167.60. Just going to show you the chart here, first of all, of the British pound. As we know, the major is here at 132, and we had that little rally back and then that lower high at that point, which is a weak pattern. So anything here in the longer term, I say that that's weak price location. Just rallied back over the last couple of weeks, and that hasn't helped the UK large cap index, the FTSE 100, which is currently at its lowest level since April. And again here the DAX, the German DAX, below its major controlling price here at the end of the week. And you can just see from the shape of the charts the situation that we have at the moment, which I've talked about many times, which is the glaring disparity or divergence between the performance of the US indices and basically the rest of the world at the moment. Major controlling price on TLT. The T-bond ETF remains here at 121. We're currently printing above that, just dipped below it earlier in the week and bounced back. So TLT in a strong price location right now. GLD, the gold ETF, has bounced back over the last couple of weeks. Extremely oversold. The sentiment is pretty dire. We could say overly bearish, but unless this major controlling price migrates lower, which it could, I'd find it very difficult to get too optimistic on this chart. We need a level to key from. I don't find one at the moment. For USO, the oil ETF, we do have a level, a 12-month, which we've been talking about for a while. That has not yet migrated higher. I thought it might migrate up to here somewhere. That hasn't happened, but in the longer term, as long as it remains above that level, it's in a strong position. Key level on the dollar index is 94.80. That is the major. Just trying to peak back above that level in the end of this week. On the short-term time frame, the sort of technical oscillators that I look at occasionally at the top here, getting a bit oversold. I did say when we were up here that there's room for a dip and still remain in a strong price location, and the most important thing is that the dollar index holds above 94.80. And from the dollar perspective, i.e. strength with the dollar, you won't want to see this chart, which is Euro FX chart, printing above its 1 year at 117.55. So again, it's rallied back, remains in a weak price location below that level. So all of this is a weak price location, and we've had resistance at that 1 year twice. And that rally on the dailies, on the short-term time frame at least, has brought these oscillators to the overbought position. I made the point earlier about how the US indices have been strongly outperforming the rest of the world. Just created this template here in the wonderful Metastock program. So we've rebased the indices that you see on the right there. We've rebased them on the left back to a starting point of 100 at the start of the year, and you can see how this sort of snapshot of the majors have performed, with the FTSE and the DAX still at the end of August a little underwater. Shanghai down here, China really struggling, and the Nikkei just in positive territory, and the S&P and the Russell 2000 at the top here. I would suggest that historically this level of disparity in performance over a good few months is pretty extreme. Okay, that concludes, and once again, thank you for watching.